Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. I always enjoy our Fridays together.
Bob, today we're going to talk about some energy ironies. For one, we know about Canada not getting its petroleum products to markets that need them. But the UK, apparently, although they're against fracking at home, they don't mind if somebody fracks away someplace else. Can you explain that?
Well, I can't explain it except it's evil. I got this headline from the Sunday Express, May 26th. And it's preventing, the British government is preventing shale gas at home. The British government hands out aid to boost fracking in China. So there are geological shale deposits in England that could be drilled and produce gas locally. So then I thought, I remember something about previous winter where many people couldn't afford the extremely high prices of fuel and shivering in a cold flat or home, and then you get a cold and flu and people are dying off. So I found the headline. This was from February 2018. Fuel poverty crisis. 3,000 Britons dying each year because they can't afford to heat their homes. Now, Jim, this is really bizarre that they could, of course they had huge oil and gas production out of the North Sea, and that, had produced for only so long, but there are geological areas in England where they could go fracking and come up with local gas deposits, which would put the price down, but you've got some maniacs in government where they have a big thing about carbon dioxide and fossil fuels, and they're just not going to allow it. And also, in their minds, increasing the price of petrol or gasoline is good because people use less of it, and then increasing the cost of home heating is good because you use less of it. But with people with poor health and shivering through a cold winter, it's not good. So I'm just pointing out that these passionate politics is really ultimately harmful. And but fortunately there is a popular uprising around the world whereby folks are taking a look at what their experts in government are doing and realize that it's in your face and in your wallet government just too much, and are reacting to it. So in Canada we've had, 5 elections that have moved, provincial elections that have moved away from that sort of politics. And we have the federal election this October, which looks like the Conservatives can win, in which case that'd be a big step away from passionate, intrusive politics, where essentially these ideas are pretty crackpot. They got this idea that concentrations of carbon dioxide influence the climate. And but if you take a look at the Vostok ice core, I think it goes back about 400,000 or 500,000 years, and it's a record of temperature, and it's also a record of the amount of CO2 in the atmosphere at the time the ice was laid down. And the evidence is that when you get a turn to a warming trend, the temperature goes up, and then 600 or 800 years later, the CO2 starts to go up. So the evidence is that CO2 doesn't cause heating. It's heating that causes CO2 to go up. So, but fortunately, this is getting more and more widespread exposure. I mean, there are lots of blogs, lots of people, articles, people, academics, high up scientists who, while they are tenured, they're at risk if they publish something that's against the policy of the university. But many of these people are retiring, and they're no longer constrained by the threat of losing their jobs, so they're then coming up and writing or publishing the appropriate reports. And it all supports that the idea that emissions of CO2 from modern society are influencing the climate is absolute nonsense. And I think this will continue to prevail, and then at some point, those who are promoting it are just going to be ignored and bypassed. So that's something to look forward to, Jim.
We'll have more with Bob Hoye right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Bob Hoye. Bob, back in the 60s, Richard Romer suggested Canada should be energy self-sufficient with an energy corridor from east to west and west to east to make sure the entire country could share in that wealth. Andrew Scheer is suggesting the same thing if he becomes prime minister as conservative leader. Is this a good plan for Canada?
Oh, yeah. But take a look at the opposition to transporting oil or natural gas. It's very, very strident. And the argument on the West Coast is that further increases in transportation of oil. Now, there's been a pipeline through our mountains out here since 1951, Trans Mountain Pipeline, and no major disasters. But the argument is that they're against increased tanker traffic on the pristine waters of the Pacific. So that's why they're blocking pipelines through BC. Then on the other side, it makes great sense to take energy from Alberta and from Saskatchewan and transport it to Quebec and Ontario. But they're against that. You've got a problem because, so what happens there is with a pipeline to, say, Quebec, then you would have fewer, because they're getting their oil by tanker from Venezuela and other places. So, and these tankers sail up the pristine waters of the Gulf of St. Lawrence. But they put a pipeline in, and that would reduce that traffic. So the left, in its opposition to anything, gets itself into a paradoxical situation. And but I think that there's more practical politics ahead of us, and the popular uprisings will continue to be effective. So, here's one, in the States with the Ohio House government, they passed a bill to save nuclear power plants, which were scheduled for shutdown. So here you have that if the left doesn't like fossil fuels, then the most practical alternative would be nuclear power. But no, they're against that as well. So they're all for windmills and solar cells, which are intermittent. So the irony is that for every unit of power being established through wind turbines or through solar cells, you have to have equivalent unit of power standby that's going to be there when the sun ain't shining and the wind isn't blowing. So it's not just very expensive to produce through wind and solar. You have to have the standby anyways. So it is a form of political and economic madness that hopefully is coming to an end. Here's the line: we could be in a new bull market for common sense. How about that, Jim?
Well, there is a suggestion that you can use a zinc solution in those giant storage tanks you see for oil and gas and turn that into batteries. But of course, that research hasn't been completed and we don't know if that's possible. Yeah. You can also, with solar heat up something very hot like sodium, liquid sodium, store that, and then use that energy to generate steam overnight for power for solar. Yeah. So there are alternatives, but they're all very expensive. And meanwhile, in Canada, we have a 200-year proven reserve in British Columbia, and it's probably growing every day with fracking. Why don't we give people a break? Why don't they promote the use of natural gas in British Columbia more? I mean, taxi cabs used to run on natural gas, didn't they?
Yeah, I think some were converted.
Yeah.
But you have a global lobby against petroleum. And you've got money coming from George Soros, you've got money coming from the Rockefeller Foundation, where they have this bizarre idea that fossil fuels are bad, and they don't want anybody to use them, and it's
well, it seems they're only bad in Canada. It's okay if the U.S. does it, yeah. But somehow if we develop the same resource in Canada, why? And what's more, I wonder why doesn't the UK and Canada, two major producers of petroleum products, give their own citizens a break instead of penalizing them for having a natural resource that's plentiful?
Well, that's the key point. But even it's not just in Canada that pipelines to the East Coast are being prevented. It's the case in the eastern seaboard states as well, where Maine is now getting natural gas, liquid natural gas, delivered from Russia. And yet they could have a pipeline going there. I mean, I think the number of miles of pipeline in the U.S. is 2.5 million miles of pipeline, and that's being added to as best possible, but it's being constrained wherever these evil political forces have their sway. So, but Jim, I'm an optimist. You can see the public is starting to really examine what these guys are saying. So, if the warming trend of the last few years, which was mainly due to the exceptional El Nino of 2015, 2016, if that then the average temperature continues to come down off of that high, which it has been doing, then maybe a couple of cool winters might then persuade people that, ordinary life and getting the most efficient type of and the best cost energy is quite all right, that you don't have to live in a political seething world that some ambitious people are trying to force on us. So, but anyways, also there's markets out there, Jim, too. The last couple of weeks, crude oil has been selling off. It had a good high at 66.60 in April. A bit overbought there and is correcting on that one. But what we're looking for here is it might turn around side of trading range through the summer, but then we're going to look at the tendency for crude oil to set a seasonal low down in December and January, which is the one we played last year. And then we got into dismal December, and on December 26th is when we had the sequential buy on crude oil and on the stock market at the same time. And then they've had this nice rally. We figured, hey, I may be out to March, April sometime, which they did do, and they were supported by rallies in base metals, which was good, but that's over. They were supported by, the stock market was supported by the rally in crude oil, but that looks like it's getting over. But with our work, the way you play the seasonals is that the good stuff would maybe happen into around May. And then if you're got your good technical tools going, you note the overboughts, which we got. So then after mid-year, we start looking for seasonal lows in commodities. You got a seasonal low for lumber in October, and you can have a seasonal low for copper, say sort of November, December. And then you can have a seasonal low for crude oil in December, January. And these will be accompanied by a sell-off in low-grade bonds, like junk bonds. And so there's a possibility of maybe facing another concern about liquidity in the financial markets come fall. So that's our theme, Jim. We were looking for good markets out to around now, and then after, say, mid-year, maybe somewhere in August, then you'd start looking for the potential decline. And so each of these rallies in the stock market are providing us another opportunity to raise liquidity, because that's likely to disappear in the fall. And we've seen a study recently about that the stock market is not overvalued. And then also on May the 8th, Warren Buffett came out and said that the stock market, I think it was something like ridiculously inexpensive. And what he was doing was comparing it to the 10-year interest rate. And then the other study we had that was somebody else published that stocks were not overvalued was based on what was going on in the 3-month bill yield, and that you had the backup whereby the Fed would lower interest rates at first sign of trouble. But the history of interest rates is that short rates like Treasury bills, they go up in the boom, and then they go down in the bust. So we hauled out some very fine quotations from September 2007, and the view then was that no problems, because the Fed would cut interest rates, and but the 3-month Treasury bill was already started down by that time, saying the boom was over. And then the Fed got in line and cut interest rates. But if you look at the history, you get the fastest decline in short-dated interest rates in the worst of bear markets. So, but these theories. So the theory that Warren Buffett is using, that the market's okay because the 10-year yield is acting well, but what we've had this week is a big sell signal on this terrific bond rally. It's in 20 years, there's only been 4 such signals as the one we're getting now. So the bond rally is not, if it rolls over, which it will, maybe it might take a week or so, but that won't help the stock market. So it's very interesting to get into the reasoning behind these studies where they say that the stock market is cheap. But what we've used is a chart where you take the S&P and relative to the average wage. And it's a lot more, I think 128 recently. And the high in 2007 by this measure, I think it was 90 or about there. And then even in the crazy dot-com bubble of 2000, it was sort of like a 106. So this market now, by this measure, is even higher priced than it's been at the peak of two previous bubbles. So one should recognize this and become cautious, and as we say, build some liquidity.
Well, Warren Buffett said it's affordable. How much is Warren Buffett worth? $100 billion or something like that?
Oh, he's one of the wealthiest men in the world.
Yeah, so everything's affordable for him.
Yeah. But no, this is not to knock Warren Buffett, who has the greatest history as a investor, a terrific record as an investor, one of the most outstanding in all of financial history. And he has done well over a long period of time. But at the moment, his statement that the stock market is ridiculously cheap is not supported by the work that we would do. Needless to say that Buffett is not a subscriber. That'd be a good idea.
Oh, well, he's welcome to listen along with everybody else, and if he wants to call in with some advice, I'd gladly take it from him.
Sure.
Bob, we have a question from Ernie, and we'll answer that question right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, Ernie asks, what's the meaning behind a very high gold-silver ratio with a modest rising RSI? And I have to ask, what is an RSI?
Oh, yeah, that's a RSI is a relative strength indicator, and it's a good measure of momentum. We use it a lot. But the gold-silver ratio, just as it is, you take gold price and you take silver price and divide one into the other. And that is one of the oldest price records in history. It goes back 1,000 years, where somebody was writing it down at one time. So, but let's see. Oh, it was in the early 1990s when we noticed that the gold-silver ratio goes up in sort of uncertain financial times, and it goes down in good times, and it's quite reliable. It's not exactly precise, but in this week, the gold-silver ratio has reached a new high over many months. It's not moving dramatically, but it's reached a new high, which for us is a warning on the financial markets that if we're looking at it now, if you get a really bold move in the gold-silver ratio moving up, then you know that there's some financial distress just around the corner. But it goes way back. The other part of following it, Jim, is that if you're in a bull market for gold and silver usually outperforms gold. in which case the ratio comes down. And so this is one of our comfort indexes on whether we're long the stocks or not. And you've got to have, for a bull market in the sector, the gold-silver ratios should be heading down, which it is not. And so the gold stocks are probably vulnerable in here to, if you've got, a liquidity problem in the fall, the gold stocks are going to be vulnerable. But what will happen here, and I can sort of see it starting now, that if we go into a financial storm, the very careful money, it just wants to park at some place so that you can get it back. So you need the most liquid items. And the most liquid items are, of course, treasury bills in the senior currency, which is still the U.S. dollar. So this, the T-bill rate increased into March, the 3-month bill, and then now it's declining and is quite broken down. The 6-month bill, it increased to December and then rolled over, and it is now breaking down. So this says that the demand by speculators for money to speculate in things is diminishing. It also suggests that the careful money out there is beginning to look for a storm and is parking in liquidity. So the most liquid item out there is treasury bill yields in the U.S. dollar. Then the other liquid item is gold. And so there's this, you're going to have a bid for gold as well if we go into a storm. But the problem is that going into a storm, there's going to be a bid for the U.S. dollar because the careful money will be buying U.S. Treasury bills. So we don't see any huge increases in the gold price in U.S. dollar terms, but in other currencies, which may then fall relative to the U.S. dollar, then gold, you'd get the bang for that, and you'd have a rally in local currency terms. So now there's one other thing going on there, as sort of a new maybe liquid item, as the Bitcoin phenomenon, where the trading volume on some of these things has been increasing quite substantially. And although you are nowhere near the liquidity that you'd have in U.S. Treasury bills or in gold, but it's interesting to consider there could be a third place for money to be parked. And this is where we think, Jim, at some point the public's going to demand a currency that can't be screwed up by economists, and probably somewhere in the Bitcoin gold combination you may end up with sound money. I think at some point the public will demand it because they don't realize that the idea of a national currency that can be depreciated, it's always depreciated for the government's benefit and is in effect state theft. So I think if we get into a liquidity crisis, it is going to be instructive all the way around. One, that genius central bankers can't prevent it, and the public's going to take a look at the trillions of dollars that have been thrown into schemes to prevent bad things from happening. And then if you're in a contraction, the folks are going to say, hey, look, you guys are crazy. This stuff doesn't work. So I can see a reform of central banking from reckless to being responsible, and also the public will demand a sound currency, and somewhere the markets, probably through a combination of Bitcoin and gold, will provide the best approximation for a sound currency that can be obtained. So, hey, here, I'm an optimist on that as well, Jim.
And just for the sake of accuracy here, I said Warren Buffett might be worth $100 billion, and searching through Google, he's worth anywhere from 80 to 88 billion. So sorry, Warren, didn't mean to shortchange you at all.
Yeah.
And Jeff Bezos, 149 billion, Bill Gates, 99 billion, Elon Musk, a mere $18 billion.
Yeah.
So, maybe, cause some people are saying that the, Tesla car company might go bankrupt, but Elon probably won't.
Don't know whether he goes down with the ship or not, but a friend of mine is a automotive engineer, and he consults to the big guys on assembly line efficiencies and stuff like that. And last year sometime, there's an engineering group in Detroit that will buy a new model car, such as the Tesla 3, and then they, in their shop, they take it apart and they bag all the parts, list it all, and then they sell that information to other big major car producers. And the point that my friend was making was that the assembly line for the Teslas has 9 times the number of parts, pieces, and whatnot that an efficient a modern assembly plant would have. They just went crazy with the production line, and there is no way that this thing can ever make any money. There's too much money in the deal. What is it, about $5 billion or tax money through loans and stuff like that. So, and the stock really has broken down. So, and it won't survive, of course, obviously, the next bear market. Now, whether Musk has got his money out or not, we won't know until the failure, and then it'll be found out what's going on. So there's another one to watch in a historical clinical sense, just to watch one of the biggest promotions in stock market history come apart. I didn't have the nerve to trade it on the short side, because for a couple of years they were very good at doing very nasty short squeezes, but I was very fascinated to see it recently break down.
Bob, always fascinating to chat with you, and we should remind people as well, if they get a chance to hear this show, that you will also be our markets guy for This Week in Money this weekend.
Yeah, we're going to do that one later on today, and I'm looking forward to it.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.